Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 12th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Randy, we have wave one done, up about 3 years ago, topped out at 114.72. We're in the process of breaking back down. The question is, after this swing point low, is that the end of this move? Is this considered an A, B, C type of move, and this is over, and we're ready to go breaking out? Or we're going to continue to grind lower as we put this destination 2 here 3+ years ago. We expected a deeper retracement, more than a 38.2. Next up is the 50 down here about 92 area. Then you got your 618 around 87. We're kind of thinking more in the 786 type of zone, somewhere around 80. Now the reason I put a question mark here is I truly don't believe that this is the end and we're ready to go breaking out. But I would be remiss to say that once the wave 2 is over, whether it's here or anywhere in between this area, or we do go to our destination zone, then once wave 2 is over, eventually we're going to get a breakout to a new high. So the plan has always been a correction followed by a new breakout. So this is why it's a question mark. It's possible that this could be the end, and now we're ready to go breaking out, but I don't think so. I think we still have more downside. Are we going to make it all the way here? Only time will tell, but we got several things we can use, like our Fibonacci extension retracement tools and price action and a lot of other things that we can anticipate where this is likely to go. Why did I put this here in the beginning before we even started to top out? Well, it goes back to the bottom reversal here back in 2007. We bottomed at 70.53. I even talked about way back when, way back in 2009, 2010, especially as we started to get in 2015 in this little zone in here, that I thought based on these moves in price action with extensions, we were going to go up to at least 115 to 120. Well, 15 years later, had no idea it was going to take 15 years, but we hit our target zone. Not too shabby. Well, I'm just as confident we're likely to go here as I was we were going here, but it is what it is with price action. So why do I think this is not finished? And I have a big question mark here because I really don't think it's finished. Let's drill into the software, and on this, we'll go to software in a moment, but on the charting platform. When we had this prior swing point low, we were looking for proportions. I went through this extensively in previous classes, but I think it's that important where we'll review it again. When you're looking at what we believe, we're in a downtrend, right? 3 years ago, we topped out at 114.72, depends on what platform you're using. On this platform, we topped down somewhere around at 114.90. So I'd have to go to like a weekly chart to show you that. And up here, that swing point high was 114.77. So a couple of ticks difference. So when we topped out here, we started to get this correction. And this looks still overlapping, chopping correction. So we talked about that a long time. As we came down, we started chopping sideways. That all of this overlapping, chopping action, we needed a new swing point low. Well, we got that. Well, so far so good. But why don't we think this is the end and we're likely still to go lower? Well, that's when you drill down to the daily chart and you zoom out and you look at some proportions. And based on this move, again, it's in prior archives, but I'll do it again today. That once we got this new swing point low, we're expecting a three-wave correction. Now, a couple of things. When you get your correction, it's an A, B, C type of move, or it's possible this could have been the end of that bigger wave two, and we're in the beginning of a breakout to new highs, right? Going onward and upwards above 114.77 on this chart, 114.72 on my MetaTrader chart, and you would expect, well, we're going to break out. Well, this could be the 1, 2, 3, but what's wrong with this picture? Well, several things. Write these down so you have them. Typically, when you look for either an ABC, right, up, that looked more 5 waves, that was one. That didn't look 3-wave correction. So expecting a 3-wave correction because we're still in a downtrend, this looked 5 waves, so that kind of leads us toward this is an A wave. Then on the B wave down, typically you get somewhere in the neighborhood of a 618 to 786 retracement zone. That's the typical area. Some go shorter, some go longer. If it's an expanded flat correction, then we'd actually make a new swing point low and still get another piece up. But so far, proportionately, we had several things going. A, that we did the beautiful move up, looked 5 waves, so that hinted we were likely going to need a 3-wave move in order for this to come back down. And when we did retrace to that 618-786 zone. And remember what I said at the time, when this was coming back down, I said, be careful, because I expect this is going to go up, because this was 5-wave. This correction went to the zone we expected. But what else did we have with the software? That was the big one. Let's go back to the swing point low, and I'm going to take these lines off for a second, and I'm going to go over to the software and show you. Back then on the software, on a weekly chart, we had a PAI hook. That's price action, AI, everything's AI. Well, this is the most important AI of them all. Market price action. MPA, PAI is what we call it, price action indicator. And this is the hook and the cross. Well, I got a PAI hook and a trend momentum cross. I had slope, I had angle and separation. So what does that equal? For those of you that have been with us know that when you get a weekly, and again, this is on a weekly chart, the W stands for weekly, a weekly PAI hook trend momentum cross equals a daily cycle up. That means the PAI is going to cycle on a daily, and at least trend momentum 1 is going to cycle on the daily. Well, I'll go back to the daily at that point, and this is when we started to bounce. And then all of a sudden, Randy and James, Ian, Mr. Tucson, Harold, Eric, Alan, right there, we did not have money flow finish the cycle. Well, looked like trend momentum 1 was close to it. PAI, red and blue made it, but green money flow did not. So a weekly PAI hook, cross, hook and cross equals the daily cycle. And at the time when this started to pull back down, we weren't quite finished the cycle. So that was another reason why that looked 5-wave. That's like the A wave. So your B wave would come down, and then you do what? Go up in a C wave. And at the time when this was happening, I said, you can expect this to turn from a slingshot down to a slingshot up. And I said, as we were getting in that 618-786 zone, be careful, because I'm expecting this to reverse and go back up, so that what? my PAI could finish its cycle, including green money flow. How beautiful was that? All right, so far so good. So this definitely looked like an ABC. Now, why wasn't this a 1-2 going up in 3 or an AB going up in C? Well, it doesn't matter if it's an AB going up in C or a 1-2 going up in 3. It meant the higher probability, the weekly hook and across, the daily was going to cycle. We pulled back. We didn't finish the cycle. So several reasons why it was going to go higher. Now, on the charting platform, we talked about this. So in an ABC, your C wave typically will go onward and upward. So you use a 3.2. What is a 3.2? That is your Fibonacci retracement. So it says right there, time-based fib extension, 3.2. You got your retracement, 2.2, extension, 3.2. So at the 3.2, you go from the swing point low, swing point high, higher low. Everybody good so far? Now looking at these numbers, we would expect, and I'm going to go ahead and take all of this off just so we could do a fresh one for you and make it more impactful. But you can see it's already on the chart, but I'll just do it again. So we're looking at the same thing. So in the case of a three-wave move, you typically, the A equals the C move. That's equality. I call that echoes, if you will. But that's typical where the A equals the C. So typically you get, and I'll write that down, A wave will equal the C wave. Or the A wave will equal, in this case, A up to the 1.272 extension equals the C wave. So typically in an A, B, your C wave goes up to equality with the A wave or extends to the 1.272 extension. That's typical in an ABC type of move, right? So let's put the drawings on here. Extension tool. So from the swing point low to that recent high to the higher low, we would expect that this move would stop somewhere between equality, that's where A equals C, that would have been this 99 zone, or up as high as the 1.272, which would have been just shy of that in this picture. So we talked about that if this rally bogs down between this equality in the 272, and in this example, I extended it just a touch more to include the Magic Fibo, that if this rally went up in this zone and failed and turned back down, then this is much likely, more likely, higher probability, going to end up as an A, B, C. And we said this in advance. We even told you as this was pulling down, be careful. It's going to reverse, and we even gave it a target where it was going to go to. That's using the power of Fibonacci's. And why is this Magic Fibo so important? Because it's part of the Fibonacci family. Some people think, what about the 50-day moving average, the 100-day, the 200? Well, everybody has his own. This works extremely well for me. I've always been in the Elliott wave and Fibonacci's. And our software is based on Elliott wave and Fibonacci's. It's all the above. So I've always used this. It is extremely important to have that on a chart. But just FYI, this Magic Fibo is generally always in the area of a 200 simple moving average. Not exactly on top, not exactly below, not exactly high. It varies, but it's always somewhere in the neighborhood. So for those of you that say, well, 200 moving averages is what I use, fine. I just found something that works, so therefore I use it. So everybody good so far? Couple of things. When it's ABC, you typically get your A equal to a C, or you go up as high as a 1272. Now, what's the difference if this was a 1, and let me put my marker on here. What if this would have been the 1, the 2? Well, that part looked good. Again, when you see 1, 2 type of wave 2s typically do the same type of thing. You get that 618, 786 zone and a retracement. Then your wave 3 usually does not stop at equality or the 144A, the 1272. It must go at least to the 1618 or higher. That's critical. So if this baby would have launched and didn't stop here and just kept grinding above this, not only above the Magic Fibo, but above this 101 area, I kind of said at the time, if we get above 101.50, they consider this 1-2 wave 3, not ABC, right? So if this would have been the bottom reversal, and that was it, folks, that's the end of the dollar index decline, and we were going breaking out to new highs, typically we need to see an impulsive 5 wave up. This is not impulsive. Even if you say that's a 1 and a 2, I don't believe the ABC story. I don't think this counts, and blah, blah, blah. Each his own. What they say is you put 10 Elliotticians in a room, and they're going to come up with about 13 or 14 different wave counts. So everybody has its own, but I think mine is just as accurate as anybody's out there. You throw that in with the software, some God-given talent to read, interpret, price, and all the above comes to fairly accurate. Have I been wrong on my forecast? Yeah, but you'll notice I always give you a primary focus of a forecast and an alternative if it turns out to not be that, what is likely to play out. So I digress, but what's the point here? That this is more likely an ABC because we did stop and didn't go long. And then even if this was the wave 3, then it's critical when the wave 4 comes down, it does not go into the area of wave 1. So at the time I was saying this 99 is going to be extremely important. This 101 up here is going to be extremely important. And if we go up into the zone and fail and come back down, then it's more likely to ABC. If we go up and break that 101, 101.50 area up here above that 1618 or higher, then this is more likely to be the wave 3. And then once we started to correct out of there, the critical level to the downside would be this wave 1 top in this example. So your wave 4 should not go into area wave 1. What if it did that? What if we came up here and that was the 3, we come down in 4? Then it kind of muddies the water because by breaking back below this, it's still overlapping and chopping, which still suggests it's probably still in a correction of some sort, and we still may get more lower low, right? So when I see a beautiful 5 wave up, I always make sure my wave 4 does not go into area wave 1, and then we go blasting off. And if we would have got a beautiful 5 wave up, followed by a 3 wave correction, and then we start blasting off again, then the likelihood this would have been the end of that big wave 2, and we're on the way of breaking out above 114.72, 114.77, etc., onward and upward, would have been very high. Well, this is why when I go back to my chart and I look at this question mark, I could really remove it because it's not in question, is it over or not? It's more that it's not over and we're going lower because of what we just discussed, that this is the ABC correction. Now we are still holding on by a thread, right? What is this green box? That happens to be, since this new swing point B low up to the C high, we're holding the 618786 zone currently, but it's by a thread, right? So this definitely looks like the beginning of another. If this is my ABC, this should be the 1, 2, and we're working on 3, 4, 5 now, right? How do we know? Well, just like we got a 618786 retracement here, guess what we have up here? From that high to this low, this little point where we reverse from is my 618786 zone. So I'll put a 2.2, and I know it puts a lot of lines on the chart, but this is why I use this platform for my charting, and then I can run my software in my other platforms and do my trading there. But notice, Randy, this bounce out of the 618786. So we're stuck between support and resistance at the moment. But this bounce went right to that 618 zone to fail. Now we need is this to turn down like it's working on it, and we close below this green box. Then it says what? 75% we're going to go down to 96.60. 70 plus plus we're going to go to 96.27, which is below that prior low, giving us a new swing point low. So far, so good. And that's based on this low to that high, that scenario. Well, what if we go even lower and say, well, how about this low to that swing point high? It's going to put us a 618, a 786, et cetera. These extensions are going to be over here even lower than these two. So I'll just run one for you, and bear with me. I know there's a ton of lines on the chart, but this all means something. We're already, because we closed below the 618 on this chart, from this low to that high, we already have a candle body, not a wick, but a candle body closed below. So right now, this dollar index says we have a 75% chance we go on to 96.60. We have a 70+% chance we go on to 96.27. Well, guess what? Here's my 618, which we haven't closed below yet. From this low to this high, there's the 618 there, right around that 97.90 area. And then you got your 786 around at 97.23. So with that in mind, we have another overlapping support zone here, which would be the 618786 off of the 96.39 low up to the swing point high. And then from the AB low, which is here, to the high, our 618786 zone is a smaller green box. So I'm going to change the color just slightly, make this one even lighter, if there's such a thing. Well, I'll make it a little bit different, make it a little bit bluer of green. So we're already closed below 618 on the smaller move. That's a higher probability this is not going to go breaking out, and this is going to break down toward these two targets. And with this rally up and rejection at a 618 from that recent high to low, that sets the tone that this is likely the ABC correction. And after an ABC correction, we typically see another move lower. And in my humble opinion, this is setting up similar to either another A down, B, and at least a C is coming, right? Or it is a 1 and a 2. So just like we use this math to decide that this was an ABC correction and we're ready to go lower, we're using the same math. Now, write this numbers down. Because we got rejected at 618, that's beautiful. That could still be an AB going down in C. Now, if this move lower stops somewhere between this 97 and this 96.28 area, that's my equality move. So this move down, equality move here would be right around that 97. And there's an easy way if you don't have the Fibo extensions. I just use this little arrow tool and say, okay, from that swing point high to the recent swing point low, you use your control key, hold your control key, left key, click and drag to make a duplicate. Then we come off of that recent high right there. And notice where that would end. It's right at, actually it's a little bit too low, there it is, right at that 786, that 972 right there, and right even right there. So equality move would put us right around 97. And if we go a little further, which is acceptable in an ABC, we could go to this 96 and even far as this 96.27. So let me show you the exact numbers for that. And I'll move these out of the way so you can see those. And I'll leave my arrow so you'll see that it'll be lined up beautifully with that. Let me get that exact move right there. So we use a 3-point tool from this recent high to this recent low to this recent lower high. And notice it's right at it. There's that 96.95. There's the line right there. And lo and behold, that would be a quality move. Now, what if we extend further? Well, it's acceptable. We could go to that 448, 1272. And if we come down in here, reverse, then this could be the ABC yet again and warrant another big move higher. Not a breakout, but continuation of this correction. But if this move coming down extends towards at least this 95 area or lower, meaning this drop goes to a 1618 or lower, then this is screaming this is not an ABC. It in fact would be a 1, 2, 3. Amen? So what do I believe this is? I believe clearly this was our A, B, C correction, because we did stop in those parameters, and we did come back down and break the 618 to the downside, setting the tone for us to go further down. And once we go a little further down, we break the 618 off of this swing point low to high. Then once we do that, we break this small green box and we get out of Dodge right there. No pun intended, Randy. Then the likelihood we go down to this 95.80 is about 75%. And then a 70+% we go to this 95.30. And ultimately that means we're going to break a new swing point low. So I believe we're in the midst of a 1, 2, 3 working our way down, and we shall see, is it going to be another ABC correction? Maybe that's a W and a little ABC, X, and we get another Y, and this turns into a complex correction, and then we go lower. Or is this baby going to start to accelerate and give us our impulsive move down? And that would be the wave 3, you get a wave 4 correction, and even another push lower if that's the case. Got it? So we'll keep an eye on this, but I would not be buying the dollar index expecting this thing to go breaking out, and I would not be selling the pound dollar, euro dollar, expecting the dollar index to go up and those currency pairs to go down. We talked about it for weeks in advance. Buy the daily PAI hook and get to your position of authority on those trades as they would get into a position of authority. And it went up 300 plus pips accordingly on both. And we're waiting for that breakout to continue as this breakdown continues on the dollar index. Got it? So let's take a look at and why do we spend so much time on the dollar index? I don't trade it. Well, I do trade it occasionally, but I mainly use it because once you know where the dollar index is going, you know where a lot of asset classes are going. And the most obvious one would be Forex pair euro dollar, their inverse relationship. So we talked about this. The software was bottoming and reversing. We set it up in advance where we talked about when the daily got oversold and the PAI hooked, you got a trigger, you want to go long. And then once you do, you want to be in a position of authority in case this decided to go up and slingshot down and make a lower high, lower low. But based on the ABC correction, this is much more likely going to go breaking out to some new highs. That's why I'm long the euro dollar and the pound dollar, expecting this to continue to break out. And again, in both cases, we talked about this as this was correcting. I said, I don't think this is ready to go breaking out. We're going to come down into the cloud area as the daily should finish the cycle for the same reasons the dollar index. We had a weekly PAI hook, trend momentum cross. We had slope angle separation. And initially, just like we did with the dollar index, the daily was not all the way lower. And this went from a slingshot up to a slingshot down, where the dollar went from a slingshot down to a slingshot from a slingshot down or slingshot up, inverse relationship. And we said, buy, don't, sell the dollar. At this point, you want to wait until he gets and finishes, then you sell it. When this got it oversold, you want to buy it, and boom, up 300 plus pips and counting, and I'm looking for more upside. That's the direction of the euro dollar. And I do expect this to continue. Why? Weekly is turning over, right? We talked about that initially, but what I anticipate is going to happen in the coming weeks, this weekly is going to slingshot back up, and we're going to go on and break new highs. Got it? That's the plan. So in the interim, we're in a position of authority on that daily bounce, and we're expecting this thing to grind higher in the days to come as that dollar index breaks down further to make new lows. This will break higher to make new highs. So let's go over to the charting platform. We'll switch gears, and here's the euro dollar. And what are we looking for? We're looking for this 1887/1940 area, longer term target. Smaller term target, again, from this high to that low. We did take out the 618. We tested the 786, so we're not officially broken above the 786, but we did get that 618 taken out, which gives us the lower target of this 118.15, 19, basically 119. So right now, Randy and others, we have a 75% chance this euro is going to continue to climb to 1850. We have a 70+% chance we're going to grind our way up to 19. Now, that does not mean when I say that this has to go up green candle every day without fail until you get to those targets. Price always stair steps because time frames always cycle. And what are we talking about cycling? The PAI and the trend momentum, right? So they always cycle. So I expect we're going to get to 1850, 19. That is this high to that low. We already took it out. Now on the higher high to the low, here's the 618 zone. We're testing it, but we hadn't closed above. We had a wick up here, and we haven't closed above that one yet. But once we do, obviously when we get toward 1850, that's going to take this out. Then that's where the 1880, 1940 comes in, and it's confluence of events. So we're definitely going to 1850, 1950 is your target zone. And it's just bear with it. Keep buying the dips in the coming days or weeks, whatever it takes. You get a big dip, you want to buy it because we're going up here, highest of highest probability. Fair enough? And we got exactly what we're looking for after an ABC. Now this one did get a little spicy from the recent high, low, lower high. What did I say, Randy? We reverse somewhere between equality and the 1272, and you do not go at least the 1618 or deeper, then this looks like an ABC, right? That's what we were talking about. We expected the dollar index to do it. We expected the euro would do it as well, even though the euro did get a little bit spicier. My dollar index went near the 1272. The euro went just a little bit below it, but it did not meet the criteria of a 1-2 going down in 3 because it has to minimum, write that down, minimum go to a 1618 or further. This thing could go plummeting to a 2618. That's fine. It could go ripping down to a 3618. That meets the criteria of a massive 1-2 and an extended third wave. Well, anybody that knows anything about Elliott wave, generally speaking, third waves are the longest. They don't have to be the longest. They just cannot be the shortest. But majority of times, the third wave is the longest. Depends what we're trading. A lot of times commodities, the fifth wave gets extended as opposed to the third wave. But this is typical, especially in Forex. So we didn't reach our wave 3 down scenario. We held the parameters of an ABC correction. And we had the software set up, the dollar index, etc. Plus we had all those things. where the euro was expected to come down and reverse, but we had a weekly hook and a cross, and we had to wait for the daily to get oversold before we would then buy this dip and look for this thing to go higher. And we're already in the 300 plus pip zone. Look, we were down here 114 and we got up to near 117, right around that $300 zone. And now we're still chopping, but it's already from the recent high to this low. We took out the 618. See that green box over here? We're closed above it here. We closed above it there. Then we're kind of chopping. But this is just pure sign that 75% we're going to 1850. 70 plus we go on to 19. And when we do that, we take out the same from this high to low, 618786. So it elevates it a little bit more toward 1887, 1940. And it is confluence of events. So ladies and gentlemen, this is where we're headed. So in my humble opinion, what I said a week plus ago, that when the daily got oversold and hooked, buy it. You're sitting pretty up in a position of authority at 200 plus, 300 pips of profit, waiting for several hundred more. Because again, we're looking at least 1850 to 1950. We break that, then we go up here to 120 area, which again, starting at 114, that's upwards of 600 pips. So we still have a few hundred more to go, say the least. So any dip should be bought until we get to these target zones. Fair enough? What about the pound dollar? Well, the pound did something very similar as well. It too made a very similar type move. Well, guess what the pound is now doing, Mr. Tucson, James, Ian? From this recent high to low, here's my 618786, the pink zone. A couple of days back, we got this candle body close, not a wick, but the body close, which now says the pound is headed to 136.50 and 75% and 70 plus percent. We're going to 137. So any dip should be bought on the pound because we're expecting this to go higher in the days to come. So you get any type of dip, keep buying and adding for this to go up to that target. Well, from this swing point high to low, my 618786 is a little bit higher up the food chain. And so far, we haven't closed above that zone. So let me move that for you. This happens to be the current target where we're shooting for. But if I go from that swing point high to low, you can see that 618's right around that 135.40 area. And then the 786 right around that 136.50 area. So we do have this other zone we have to get through. And I don't want you to take, this is the target for this lower move. From that high to this low, that's my target. Then when we get to this target, we're going to break the 618786. So Randy, what's my target after that? Then we start targeting 3880, followed by 3960. So we're not there to this target. We don't have a 75% chance to get to 3880 yet. We have a 75% chance to get to 3650 and a 70 plus to get to 37. But once we get there, then we take that out, focusing us up at that 3880 and 139.60 area. So my buyer says, keep buying the dips till you get these targets. Once we break that and get there and a candle body, not a wick, closes up here, then we expect to keep buying the dips till we get to that 3880, 39.60 area. We break that, then we start targeting 141 up there. Okay? All righty. How about that? But the same type of move was in its move right there. So from this high to that low to this lower high, notice what the pound did. This is why it makes so much sense to use these extensions and Fibos. That this was clearly, which we diagnosed this long before it played out. I kept telling you we're going to see the pound daily reverse and we're going to see the euro daily reverse at the same time after their respective A B, C type of retracement. And how do I know that was an ABC correction? Because if this is a 1-2, then if it was a 3 down, we had to go below this 171 or deeper to extend in order that to be a 1-2 going down in 3. And the pound has been in an uptrend for 3+ years now. We peg that. You're up thousands and thousands of pips if you were with us 3 years ago, which we talked about this overextension down here when we hit this 105 low, 103 actually. We hit the swing point low 3+ years ago, well, actually 3 years coming in September of 22, that we said, look, you need to be going long the pound because we're going to get a correction that's going to be thousands and thousands and thousands of pips. At no point do I think this reversal is going to go on and break all-time highs. It's just going to reverse and do a nice retracement. And here you are from 103 up to 134. That's well over 3,000 pips. And I still think, based on our projection and measurement, we're probably going to make a move up toward maybe 160, 165 if we hit our target, which we still got to keep going. Look at this bigger high to low here, Randy. Check it out. We took out the 618. This is from this high to that low. We took out that 618. We're taking out the 786 because we actually went up higher and we pulled back, but we're starting to take that out. Look at these closes up here. 134, 133. Let's see, 134. Where was it? 134. So we're testing and right at taking this out. So we already, from this bigger picture, high to low, we clearly took out this one. We're well above it now, and we've been above that for months, right? So we have a 75% chance the pound is going to grind up to 148. We have a 70+% chance we're going to go to 153 before this is done. My target originally was just a tad bit higher, but for now you can see the targets. That alone already stated from the high to the low, we broke above the 618, 75% chance target. So we rinse and repeat along the way, but the bigger picture has always been a much deeper retracement toward that 150 to 160, 165 area. That's kind of the plan. Where does that come from? Go out on a weekly chart, probably big enough. We can go from all-time highs to the low, and all we're looking for is somewhere between a 50/618 retracement. That's kind of why I said somewhere around that 160, 158, 160, maybe as high as 165. I really don't think we're going to go as blow past this and go as high as this 786 up here. I think we're going to make the lower high over here, then a lower low. What we always do on Tuesdays is we look at a little Elliott wave action. And here's our Elliott wave chart. We talked about this beautiful reversal, and this appears to be a 1-2 instead of an A, B, C, and it's over. So I do think that proportionate-wise, we did exactly the retracement we need, and we're not quite finished yet. So we'll see where this wave 3 ends. But right now, we're still bullish to continue to break out, and this is this wave 3 extending. So far, so good. And all we're looking for in the bigger picture, so I need to kind of consolidate this a little bit, and that is, big picture, all we're doing is an A, up in B, and then years from now, we're going to get another C down that's likely to come into the area of wave A, which is this 95 area or lower for a wave C correction. But I won't bore you with, well, Gary, once we get up here, what am I going to do? I'm going to start shorting the euro for years to come and have this thing go down thousands of pips as we move in, probably into the 2030s for that. And I said when this bottomed here, we were looking at thousands of pips in a retracement, and it would take years. Here we are about 3 years out. So far, so good. About 3 years out, and we're not there yet. So could it take another year? Sure. Could it take 2 more years? Maybe. It took about 15 plus years to get the high to the low. So this could be a proportionate, maybe of the 15 down, takes 5 years for the correction. So the hardest part is not necessarily where price is going, but how long is it going to take to get there? Well, I warned you this in the archives. Man, this is a great opportunity. We're going to go up thousands of pips. And so far, so good. We went from 0.95 all the way up to this 117, 117-ish. So 0.95, 105, 115, 125. So we're almost getting to our 3,000 plus pips, 2,000 plus and counting, and still got more to go, in my humble opinion. Fair enough? So that's the big picture. A, B, then we come back down and C. And this beautiful correction ended up being, was that a 1-2-1-2? It didn't play out the parameters. So what did I say? Once we break the swing point low, I would not be shorting the euro because I expect it to go down to this 618 retracement and reverse from there. Went right to that target. And I talked about this potential target about 2+ years in advance. After we did this move and pull back and another move and a higher low, and we said, is this potentially 1-2-1-2? And we're ready to go exploding higher. And I said, be careful if we kind of fizzle out, then we're going to make a new low and we'd likely go to that 618. And from this low to that high was a beautiful 618 retracement. And that is still very bullish for us to extend much further. And on the higher time frame, all we're looking for from the all-time high to the low, actually I have it on this other chart, make it a little bit easier. Go to the monthly chart, plus you get to see the beautiful software, that from the all-time high to the low, all we're looking for is a 618/786 retracement. See how often this comes up? 135 to 146, kind of fine tuning 140 to 145. As I anticipated, the euro would give us a deeper retracement, but we're hitting the magic Fibo and we closed above, we tested it, we're holding. So this is a very bullish sign. Remember I said the 200 moving average typically hangs out somewhere in the vicinity of the magic Fibo? Well, there you have it. So we haven't crossed the 200 moving average. We did close above and we retested this and we're still holding the magic Fibo. That's extremely bullish. And before I think we get up here where the plan is to go, we may run up here to 200, pull down and retest this again to go bouncing, but we broke it, we're tested it once. We may get another retest, maybe. But the plan is to continue grinding higher in the weeks and months to come. So I anticipated this when we got the monthly, weekly, daily reversal, and we talked about buying this 3+ years ago. I drew this, what we call paint the Picasso, and I said this eventually is going to cycle up. Then it's going to start slingshotting higher and higher and higher. That's how we get up there. Kind of like we did over here. Sometimes you get a little small slingshot, sometimes you get larger slingshot, but it's all the same type of move where we expect this is still going to grind higher. And right now, all we're targeting is on the euro is that 118. So we'll go back to the daily and then we'll extend it out toward that 119, 119.40. But our target currently is the 118.50 to 119.50, right? 118.50 up to 119.50. That's our zone, and we still have 200 to 300 more pips coming. I like those odds. So just like when it was down here at 114, I said, let's buy. I told you that on this correction, let's buy. We would reach those targets. We did. And then the bottom reversal here at 102, buy and reverse, was hundreds of pips. And then the correction and the correction. And we keep buying and adding and buying and adding and buying and adding while we continue to go higher. Fair enough? What about the dollar yen? Kind of warned you about this as it was going higher. As the dollar breaks down, I expect the dollar yen to break down. As the euro dollar should go higher, pound dollar. See, the dollar is in the secondary position, where the dollar yen is in the primary position. If our US dollar weakens, we're expecting this to go lower. And as this went up, I warned you about that. I said I would not be buying this at this point. We might go as high as this zone, and the higher we go, I'd look to short it. And we came close, but no cigar. And sure enough, we're kind of going down. This latest little bounce that the dollar is trying to bounce a little bit, we're looking for lower high, lower low. So I would run, zoom this in if you're trading the dollar yen. Boy, did we peg that, go back weeks and years ago. We talked about the carry trade. And I made a bold statement, not a prediction. Everybody does a prediction. The weatherman, the forecast, uh, sports analyst, you name it, and then some. Everybody's got a prediction. Well, I'll leave that to the prophets. I anticipate with the best of them. I have a God-given talent, thank you, Lord, for reading, interpreting price. So I made this statement. We hold this 127, we were going to go to 160. Highest of highest probability. When we were down here, I said we hold this 127, which happens to be from recent low to high, 618 retracement. We hold that, we would go up to these extensions. And I made a statement way back in 23 that a great opportunity on the dollar yen, because the dollar had interest rate hikes in the way, and the yen was at a negative interest rate. Since then, they raised a couple of points, not full points, but fractions, where they used to be negative interest rate and we were positive interest rate. You would go long the dollar yen, and we not only made the pips, thousands of pips going up, but we also had interest payments along the way. And we gave you that target years in advance, and it went right to that 160 target, actually went a little bit higher, and then that. Then after we got the carry trade unwinding, I said, let's buy this again because it's going to go back to that 618,786 retracement zone. Didn't necessarily think it was going to break out, but I did say that we at least get this retracement back up. We got that. And then I warned you since then, we got a high, we got a low, we got a lower high. We're double bottoming. And now we got a three-wave correction, which states we should go lower. So if our dollar continues to fall as anticipated, this dollar yen should go lower as well. Then what? Well, once this correction is finally over and our dollar goes down to whether we get to our 80 target or we just go lower, when that's finished and then our dollar index wave 2 starts shooting and we go to new highs, then I'll be looking to buy that dollar yen again and look for this thing to go up thousands of pips again. But be careful. I do think we got more downside coming. Fair enough? All righty. So any big rallies on this dollar yen in the short term should be sold, because we're not looking for this to go breaking out now. As our dollar breaks down, this dollar yen should break down. Now, Randy, be careful with Mr. Pound Yen up here. It's, the pound's getting bullish. Does that mean this pound yen has to go breaking out? Maybe, maybe not, but we're right in that major down zone. We got this move. We got all this overlapping, chopping, grinding, grunting, laboring move. And maybe we get a little something, something more. I did warn you about some of these, and we got several hundred pips pushback. And now we're grinding again. Could we go breaking out? Anything's possible. But this big pink box is my 618786 zone. If I can grab that middle one without pulling everything else. I always move what I don't want to move. So that's from the recent high to low. The carry trade unwinding is what they said caused this. And we've been testing it and failing, testing and failing, and we're still in that zone. So until we clear that hurdle, then we can start looking for some more upside. But I would not be aggressively buying, expecting this thing to go up hundreds and thousands of pips right now. I would expect with all this overlapping chopping action, this kind of looks like the IWM. Kind of got a leg down, overlapping, and we're likely going to make a new swing point low before we go blasting off into the stratosphere. I think we're going to end up making a new low. So is this leg one consolidation, leg two down? We shall see. But if you're in this long, I'd definitely be taking profits because this thing is likely to get rejected yet again. It's tried multiple times, and each time it's been rejected. Based on this move up, this does not look three-wave correction here to warrant this thing to continuation. This looks chopping and overlapping, which would look more like another leg down. What do we know about the yen? When our markets start correcting, market crash, Elizabeth, I'm coming to join you, honey, which is kind of projected out to 2026. I mean, this punch junk euphoria can continue, but I'd be careful because when that happens, what do we know about the pound yen? Well, we can do a little review of the previous years. And back during the financial crisis of 2007 to 2009, this baby plummeted 52%, 13,000 pips. Wow. Up here from 253 down to this eventual low over here at 117, but that was roughly about 13,000 pips. That's not too shabby. Then when we had the dot-com bubble burst, what happened? Another 38% decline. Thousands of pips yet again. So we've learned that when we end up going in the market crash scenario, here's the two big financial crises of late. What is the Elizabeth, I'm coming to join you, honey, going to look like? Is it going to give us a 38? Is it going to give us a 52? Or is it going to even be bigger? Well, what if it just kind of matched the 52? That put us down here about parity, 100, maybe 100 level. That's a lot of pips down. So I'm not trying to imply, well, Randy, I'd go short right now and don't stop staying short until you're down here at 100. We're not at Elizabeth, I'm ready to come join you, honey, yet either. But when the market starts crashing and everybody's running for the hills, that's a beautiful time to short this pound yen. We're going to be selling the pound, buying the yen, and look for this pound yen pair to go much lower. That's on the charts inevitably. Then if you've been with us for many years, back during the COVID scenario, we talked about this. Based on the low, the high, the higher low, and this chopping, overlapping action after a move up, this looked like the judicial correction. We said, made a bold statement, that this baby in the coming years, from this low back in 2020 area, was going to go up and make a new swing point high above that swing point high and push upwards of 8 to 10,000 pips. Made that statement years in advance. What did it do? Went up and made a new swing point high. Beautiful. So I have a innate ability, a God-given talent, and one of my favorite trading pairs is the pound yen. I did very well, and I continue to do well on the pound yen, but I understand price action, the software, the reversals, all the above. So in closing on the pound yen, I'm not going to tell you this thing can't go higher. From the recent high to low, we're closing above the 618786. That's what that candle's doing today. That is today's candle. So what does that leave us with? If we can close above, it's not over, but if we close above, we tested it. Now it looks like we're well above it. You know, zoom in the green box within the green box. So from that high to that low, we close above it today, then we're likely going to 200, maybe 201. which is another 100 pips or so ish. But I would be careful that if I bought that bounce, why was this a good bounce to buy? Because it reached the extension zone and came near the Magic Fibo. And more importantly than all of that, if you're just looking at what? The software. Software gave us a beautiful reversal. I believe I have it on this one already. Either one, I'll find it very quickly. There's the dollar yen. Let me see if I got a pound yen open. If not, I'll open one. Pound yen. I guess I do have it in my main platform. Come this way. Pound yen. And let me show you that software. So Randy, if you're long, definitely be in a position of authority. I won't say it's not going to go higher, but we had a beautiful daily reversal. Trigger higher, went to oversold territory, and we got this little correction, former battle zone, former resistance, support, resistance, support, resistance, resistance, support, support, and a reversal. So this is why I would definitely be taking profits in a position of authority, because now my daily's getting back in overbought, which we could go a little something more. I mean, this thing could sneeze 100 pips. Inhale, exhale, it goes up that 100 pips and starts reversing. But the daily's getting back in overbought territory. The weekly's still in overbought territory. Gotta peg that. Retracement, overlapping. Now we're starting to see it back in overbought. So this is not conducive to keep buying the dips on the pound yen. This is to get to your position of authority and look for us to get rejected. So this is why the bigger picture was we're in that zone, right? Former high to low, 618786, big pink box. We get rejected. We get rejected. We're getting rejected, and we're likely to get rejected again. So if you are long, congratulations, beautiful move up. It's up about 400 or 500 pips. Beautiful. Great. Take those profits. Could go a little bit more, maybe. Maybe we could go up another few ticks. Not much, we're at 199.90 and we're talking 260, so maybe 60 more pips. Maybe we go up about 100 pips, maybe. But I would not be buying long here expecting this thing to go up to 26, 27, 212 and start looking for those extensions. I look for this to start reversing, so take those profits. Let's continue. I have some interesting scenario I want to review with you guys, a new little tool we can use, add to our toolbox. But let's jump into ES. We're just grinding, grunting. CPI came out today, a little hotter than expected, but it's still more controlled than it was 4 years ago when it was transitory. Transitory inflation. Yeah, that's what Janet Yellen said. It's transitory. Transitory. What happened? Prices went to the moon. Well, CPI is not dead. Inflation is not dead. I showed you a graph a while back that talked about the third leg of inflation. We're starting to hit that zone. So I even warned us about the Fed might have to actually raise rates before it's done. And that's based on, and of course, my computer had to restart with some update, but we look at something we call the DGS2, which is the 2-year maturity rate. And we add to that the Fed fund rate, FED, FUNDS. You click it, so you get a check mark there. And then you put this on the chart, and then you go over here to your margin, you right click and say regular. And here's the Fed rate up here. What is that? That's the 4.5/4.25 market rate, which you average the two. It's about 4.33. And why I said the other Fed meeting, why he was not likely to cut rates, because if they cut rates a quarter point, that's going to put it down near this green line. So it'd be 4.25 and 4.0 would put us somewhere around this area. And the line was very close to that area. So if we lower this and that baby pops and starts crossing above their rate, then the Fed's going to look foolish for cutting rates, and then all of a sudden they're going to have to raise rates. But we had this on the bigger picture that we might see inflation come back with a vengeance. All we need is oil prices to start ramping up. Well, what can happen? We're going to go over oil in a minute, but if oil does end up breaking down to $50, the world needs oil at $60 and above, and true exploration needs to be up the upper 60s range, but somewhere between 60 and 90 would be ideal. You start crossing 90 and higher, then everything, cost, goods and services, everything gets out of whack and inflation goes insane. So what could cause it? Oil prices dip down to the 50s and the world needs it at 60s or higher. Certainly the Middle East knows how to manipulate oil prices, and maybe we get some sort of little war breakout in the Middle East, etc. So anything can happen to force oil prices to go soaring, and if that happens, inflation's going to go with it, and the Fed's not only going to cut rates, they're going to have to start raising rates. But here's your tool. I don't know if you ever see me talk about this, Randy, but this goes back in all the different financial crises in the past. Back in the dot-com bubble burst, you think the Fed makes the interest rate policy? They don't. They chase the 2-year maturity rate. So when it goes up, the Fed has to raise rates. When it goes down, the Fed cuts rates. So here's back in dot-com bubble burst. Went up, Fed had to raise rates. It started plummeting. The Fed had to cut rates into that market crisis. Then we had the recovery and it started ripping higher. The Fed had to raise rates until what happened? We went into the 2007 financial crisis and then it started plummeting. The Fed had to cut rates. Then into COVID, we got another big run. And even before COVID and lockdown and the whole scenario, wear a mask, get a vaccine, blah, 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 which turned out to be mostly hype and all stuff. It was serious, but yet overkill. I digress, but the same thing. This was on the charts, Ian, that we were going to go down and the Fed would cut rates. Then, of course, when we started raising rates, wasn't because they just wanted to. It's because the 2-year maturity rate went racing off. So right now, as the Fed started to cut rates into the election, you think it's not political, but inflation was higher at the time. He cut rates and inflation is still hanging on and he's not cutting rates. But it was interesting how he cut rates into the election and then he stopped and he got nervous because as soon as he started cutting rates, look at the maturity rate went back and even poked its head above their rate policy, which would have been, uh-oh, if this thing keeps going, I'm going to have to raise rates. And then it pulled back again. So go back to the daily so we can zoom in on this price action. And we're kind of stuck right around this 3.6, 3.7. And that's not too far from if we cut 25 basis points, we're going to be awfully close to the current rate. So inflationary pressure today, reason I'm bringing that up, is CPI's release was not that great. All right, let's go to, let me get this calendar to this week. And we see CPI numbers kind of in line with expectations, but this is not contracting. It's still growing. 2.7, 2.8 came in at 2.7. That's still 2.7%. That's above the Fed's 2% rate. It's in the ballpark, but it's still above. And that means inflation is still increasing. Prices have come down from where they were, but it's not over. And this thing could come back with a vengeance. We talked about it. So you extrapolate what's still being released. Yes, it's much lower than it was the last time he cut rates. But look at our chart, our DGS2 chart, and we had a bit more room. So when we were way up here, look at how far we had dipped when he started cutting rates. He had a little wiggle room to do so. Now he doesn't. Because if we cut even just 25 basis points, we're going to be there and this thing spikes. Uh-oh. And even a couple of times we spiked above his rate before we pulled back again. So that's why he's kind of leery about that. I know he's under a lot of pressure, this, that, and the other, but this is what they use as a tool. So what are they doing? They're using crypto, the USDT and USDC stable coins, crypto coins, as a way to inflate this. So they got a new buyer of our treasuries using those coins. That's interesting. Which, is that a good thing? Well, it prevents the Fed from producing more dollars per se, but it's still adding to the M2, the big market overall problem and inflationary pressure. So it's interesting to see what happens here, but I can assure you, looking at this chart, if this baby goes ripping higher, they're not going to be cutting rates. They're going to have to raise rates. And all we need is oil prices to go ripping higher, and this thing's going to get out of control. Right? So what could cause it? Oil prices dipping down to 50 because the world needs at least 60 and higher to function. And then if we go ripping higher and we get above 90 and 100, then everything, goods and services, goes to the moon, and inflation's going to go out of control, and this 2-year maturity rate's going to go like that, and the Fed's going to have to chase it higher. So we're not in all clear, and everybody's betting on we're going to have lower mortgage rates, we're going to have lower interest rates, we're going to have lower everything. Not in the cards yet, based on this chart. And that's basically what they follow. So it'll be interesting to see, but mark my words, oil prices go ripping into the 80, 90 range, anywhere above 90, which technically is on the charts to do so, technically. That'll cause inflation to go up, and this thing would go ripping higher, and then the Fed rate's going to have to chase it higher. So we're not out of the woods yet. Just FYI, in my humble opinion. So back to the question at hand. What about our markets? Well, this is conducive right now, James. We fail, we fail, we fail, but look at today. Punch junk euphoria. CPI is not at 5, 6, 7%. It's within range, and life is good. Life is great. Why are we breaking out? Global liquidity. What does that mean? Part of that USDC, USDT, those coins, they're buying some treasuries with it, try to keep that treasury level lower, and they're starting to rip. But the global liquidity globally, as I have a gauge for that, and I'll show you, it's breaking out. And I warned you, if it started to break out, then these babies are going to break out too. So if this holds today, target 6,500. Another 50 plus 52 points. This closes above this pink box today. We tested it, failed, tested it, failed, tested it, failed. And I was looking for, this didn't look like a 3-wave correction. I'm looking for this to then reverse, but this could also be an expanded flat correction, right? A, B, even we get up here and then C back down. So I would be aggressively taking profits, even though I think we are going to go higher. Be careful. This close today would say we got a 75% chance we go visit 65, 70 plus we go to 65.30. And that's from the recent high to low. We broke the 618, 786, which we hold today. Highest probability we're going to grind up there. There's still a 25% chance we could fizzle and break back down. And I'm still leery, uncomfortable about this, because this did not look 3-wave. This looks corrective, and this could certainly still be an A. And if we break a new all-time high, expanded flat B, so this could be the A right there, and we get an expanded flat B, which would put us somewhere in that 6,500. And then we come down in C still. So I'd be aggressively taking profits on that move up, not just keep loading the boat. And also, all of this V-shaped recovery from the tariff talk a few months ago, the tariffs, oh, it's doom and gloom. Tariffs going to cause inflation. The world's going to end. Consumer price, everybody's going to have to pay higher prices and all of this and blah, blah, blah. Well, I warned you about that V-shaped recovery, and the more this V-shape just keeps going higher and higher with the punch drunk euphoria, setting up that Elizabeth, I'm coming to join you, honey, sooner than later, but no later than later. But market price is market price, and this is stating we're likely going to 65. Kind of our target over here, we hit the 1448. Now we're shooting for the 1272. That's up at 65. The recent high to low, 65. Confluence of events. So this is looking good. But I still think before we break 7, we're going to break 4. So I'm still very leery about it. But there you have it. It is what it is. Much as I want that correction still to come, price action's proving otherwise right now, and we're likely going to visit 65. NASDAQ. It too, V-shaped recovery. We kind of bogged down for a minute. Looks like we're going to try to break all-time highs. So we come down, we do the extension from the recent high to low. This is clearing the hurdle. We already did it yesterday. You can see the pink box. We closed above it yesterday. So Mr. Tucson and others, this says we're going to visit 24,000. Highest probability we're going to visit 24,000. But I also be very careful because, again, the correction doesn't look 3-wave. It looks more 5-wave-ish, would still suggest the expanded flat is playing out here, where this is the A, this is the B, and we're likely to go up into the zone. And then we come down in a C before we get the end of the year rally to go up to 26,000 range, perhaps. So be in a position of authority on this. Yes, hint, hint, hint. I think we're going to 24, but maybe we extend it a little bit more, but I'd be awfully careful and be in a position of authority. Because again, you drill down on this latest correction, which on this weekly chart looks just like one candle, and then we're reversed. Big, beautiful candle back up. You come down to a daily. Where's a 3-wave move? Couple of days on that thing. Doesn't look like much. A 4-hour. Yeah, come down on that correction. And even with this 4-hour, where's the 3-wave move? 1, 2, 3, 4, 5. Or is this 1, 2, 3, 4, 5? Nothing about this looks 3-wave in nature. So that is a big warning, warning, warning. Will Rogers, danger, danger, danger. And this is grinding, yes. So just as the market feels invincible and there's no way it's going to pull back, it's straight up to the moon, Alice, to the moon. And I agree, highest probability we're going to visit 24 up here. But it still could be an A, B, C back down. So I would definitely be aggressively taking profits and be in a position of authority because we're still retesting all-time highs. And sometimes you double top on that and then it fails, or we go to the extension, but definitely be in your position of authority. Fair enough? And I still would like to see a correction before we get the blow off top, which we're talking upwards of 25, 26,000. So I'll go back to my daily chart. Here's my box area and target zone. And I do think we're going to get up in this zone. And then we're going to look into 2026. And is that when, Elizabeth, I'm coming to join you, honey, comes to rear its head? We shall see. But the technical picture is screaming. I've shown you this many times. We haven't had a 618 retracement off of this move since 2009. So I got to condense this way down. And that 2009 correction right here, we haven't had a 618 style retracement. And that is years and years and years later, obviously, right? So that 618786 retracement is looming. So do you really think Nasdaq's going to go back toward 10,000? Well, it all depends on when that big market crash comes, and it's unavoidable. It will happen. Pay me now, pay me later, but no later than later, it's going to happen. So I'm thinking we're going to go up toward 26,000-ish for the blow off top. And then you run your Fibo from the low up to that 26,000-ish top. And that would put your 618 style retracement somewhere around that 10,000 zone. We'll see how that plays out. Probably see it easier on a monthly. I can stretch that out a little bit. But we haven't had a 618 style retracement since this 2009 bottom. See, here we had one there from 2000 to 2008, 2009. But since this low, there's not been a 618 retracement in Houston. That is a problem. We need one. We're always going to end up seeing it. Pay me now, pay me later. Eventually, you're going to see it. But we haven't had one. So that's why I'm very concerned. And notice who's lurking around that 10,000. Magic Fibo. How about that? So that's what we're looking for. Elizabeth, I'm coming to join you, honey, the big one. But first things first, based on latest price action, we broke that resistance zone. We're more likely going to grind toward that 24,000. So look for this to keep grinding. I made a notion about global liquidity. That's what I look for the Nikkei for. Nikkei is breaking out, Randy. I said it months and months and months and months ago when we finally took out this resistance zone and started to break out. Where were we going to go? Up here to the extensions, 448, 272, up to maybe up here. So I think this is a good time that this baby is going to go breaking out global liquidity. And what's helping with that? All of the new USDT, USDC, buying some of our interest, our mortgage, buying our treasuries, and a new buyer of our treasuries, and that's pushing global liquidity. Woohoo! We're going up. And what did I say when this baby starts ripping into the zone? We're going to go to all-time highs. We're doing it, right? Said that months and months ago, and we're doing it. So this is a beautiful sign we're breaking out. So how high should we go? I think we got a good chance to go up somewhere between that 48 and 52,000. At least a 1272 minimum, probably pushing to 1618 up here. So kind of this 48 to 52 zone is where I think this baby is going to stair step and grind its way to. And I said if global liquidity goes ripping up there, then our markets would do the same. Look at the Dow. It still hasn't broken out to all-time highs yet. But if this continues, I think we got a good chance to go visiting up here. And we came awfully close the other week. And we kind of pulled back a little bit. It's looking a little corrective in nature after this V-shaped recovery. So I still think there's more upside before this blow-off top is done. And I would definitely think we're going to get a new all-time high on the Dow before it's over with. ES, we've already done it, right? Already made all-time highs, and we're about to do it again as we go towards 65. And NASDAQ, we've already done it, and we're likely to do it again as we go up toward that 24 target. But then, do we get the correction into maybe September, October? Then we do the blow off top for year end, Santa Claus rally. But this is kind of the zone in which I think we're going to reverse. I did not make a prediction, but I made a statement before we break 7. We're going to break 4. So we'll see how that plays out. But this V-shaped recovery, I've shown you this several times, and you go back to a 3-day and you scroll back to our market crash of 2007 to 2009 over here, and you zoom in on this, and I'll stretch this out so everybody can see it, but I spent a lot of time on this in the past, and this looks eerily the same as what we're doing right now. And back then, we got the same look and feel of this pattern where we just kind of grinded higher, made an all-time high. We went down and we bounced off the 3-day V-shaped recovery, no 618 retracements in that. And we went on to make all-time highs to then what? Financial crisis. And we dropped 57%, I believe it was. 50, I think it was 57%. Let me just do a quick look. Memory serve. From that high to this low, yep, right at a 57% decline, 57 and change. So is that what's the big one I'm coming to visit you? Possibly. Maybe we get a rinse and repeat. But notice this structure where we came down, bounced off the 3-day Magic Fibo to then do a V-shaped recovery to all-time highs before the big one happened. Well, look at this on a weekly chart now and at current price action. It looks eerily the same. So I'll bring this back to current price action and look at that price pattern, which is duplicating yet again. This time it's on a higher time frame. We kind of chopped, grinding, went to all-time highs, got a big down move, bounced off the Magic Fibo. This time it's a weekly, even a higher time frame. Got that V-shaped recovery. And lo and behold, we still think we're going up a little higher. I have been targeting that 6,600. It's kind of been in my crosshairs for many years now for the top and reversal. So be careful on this. It could be that corrective ABC expanded flat. We come down and do another correction, maybe September, October, and then we go ripping year end to get to that 66. But again, I made a statement years ago, a long time ago, before we break 7, we're going to break 4. And who is on the 4? That is the Magic Fibo on a monthly chart. That's the only one that is below 4. And we got the same thing, which I think we even go lower than that. If you take and go from the monthly chart, we do the same type of thing from that 2009 low. I'll move that up, stretch it out just a touch. But that 2009 low, we never had a 618 retracement. We just been ripping higher. And what's up? We're likely going to get a 618 type of retracement. Look where that is. 28. That's below the Magic Fibo on a monthly. So that would be similar. A 57+% decline would put us somewhere around that 618 retracement. Like we got back over here from 2007 to 2009 crash. Is this inevitable in 2026? Yeah, that's kind of the plan. And the higher we go, the more we can fall. So be careful. I'm not all snap is right. Definitely all snap. So closing on ES, go back to the daily chart, stretch this baby out. We do believe we're going to that 6,400, 6,500. Highest probability this closes above this pink box today and we don't get a big sell-off, then there's your targets. NASDAQ, there's your targets. Again, stretch that out. Look at current price action. Closed above it already. So we got a 75% chance we're going to 24,000. 70 plus, 24.1. So, yep, do think we're going higher. But again, this was not a 3-wave correction. It looks 5-wave. No matter how I drill down, I go to an hour. I'd have to compress this to get back to that correction. But Randy and others, where's a three wave in here? Let me take that big arrow out and we remove that so we can see it. Where's three wave in here? I don't know. We've been grinding higher. Where's the three wave correction? But yet we're blasting off. See, we're kind of getting rejected up at the highs again. So, yeah, it looks like we're going to 24, but I'd be awfully cautious. Be in a position of authority if this thing gets yanked from under us, that this still looks more like an A, B, C correction. Because again, I don't see this as a three waver. Hard to see it. Maybe that's a 1, 2, 3, 4, 5, a little insipid nothing type of B wave, and another 1, 2, 3, 4, 5. I guess anything's possible if you look at it hard enough. That I can see that as look. There you go. Well, A, B, C. A equals C. It's pretty close. Let me do my little arrows and see if that even measures up. If this is the A wave, and that was my little B wave, and it kind of measures up, so maybe it's possible. But Harold, I'm not liking it too much. Yes, I do like this, and we're probably going to go visit 24, but it does not mean, because I said that this has to go green candle, green candle, green candle every day. It could end up, well, put it this way. If we resoundingly fail here because that was the A, this is the B, and we don't get to 24,000 before we falter and we come down in C, all I can say is if that happens, I'm extremely bullish because I do think the blow off top is going to end up somewhere around that 25 to 26,000 before we're done. So be in a position of authority here. Yes, we close above the resistance zone. So it's more likely going to be we go to 24,000. I like the daily chart. And how, when we look at the daily chart from the recent high to low, even though it wasn't a three wave correction, in my humble opinion, we're still closing above that 786, 618, 786 zone. We're getting rejected at the moment at the prior all time high, but there's still a 75% chance we're going up here. What that doesn't mean is this has to stay green, the next day green, the next day, or end up there today, which is possible. I mean, this thing could go blowing up, reach that and hit a big, massive reversal out of there. But I would be extremely careful as we start to get to that target zone. I would not be loading up longs because what's happening right now, same thing that happened back in 2007. What do you mean, Gary? What do you mean what's happening right now? The big hedge funds and the big players, I guess I got to go back to the monthly to do this fast, are loading up on shorts. Back in 2007, when the market just kept grinding higher and grinding higher, it's going up to the moon, Alice. It's never going to stop. Buy calls, buy calls. The big dogs were loading up on puts. They're at the highest put ratio in maybe recent history. I don't know about all time history, but the put ratio is getting extensively high. And they made a statement that it's at highest rates we've seen. So, what is that telling you? We might get that last little blow off top and then we get a big correction. So, is that setting up for the market crash? Or is it just setting up for a potential little pullback to get the blow off top? So, cautionary tales is big time right now. You see what the markets are doing? Yes, it seems they're grinding higher forever. Throw in the AI talk. They're spending billions and billions and billions on AI. And at what point does AI change our lifetime and our lifestyle? Well, remember the dot-com bubble burst? The internet was going to change our life forever. It did, but it took a lot longer than they thought. And we got that crash out of there, right? We lost, I believe it was upwards of 50 plus percent. Wrong tool, this tool, from the dot-com bubble burst, 80 plus percent. Yep, 83% decline. And it was all about the internet was going to change our lives forever. Well, it actually did, totally. But it didn't do it overnight. It took time. Well, that's what AI is doing right now. It's going to change your life forever. And 100%, I believe it. But it's going to take time. We might see this. And that's where the Elizabeth, I'm coming to join you, honey, comes in. All of that money they're spending on AI, the return on investment is not there yet. So we could see some massive crashes like we did with the internet scenario before we then changes our lives forever. It will, just like the internet did, guarantee, in my humble opinion, it's going to change us, but it may not come as fast as they think, and the return on investment is not there right now. It is not. So be careful. That sets up the Elizabeth, I'm coming to join you, honey. Now, I mentioned I had something interesting I wanted to show you, and I do. And it's very interesting. Come over here and look at stock screen. I got the market chameleon. You can search this market chameleon, and you can click on. So when you get to market chameleon, you want to click on new stocks, 52-week high and lows. Then click the 52-week high. So the most recent ones are up top, like ALNY, CMI, QQQ, BlackRock, etc. And I've been doing some research, and I read an article that any companies that have been reaching 52-week highs after 3 to 6 month consolidation typically will go on to do a 30% or higher greater percent gain than the S&P and NASDAQ. At least 30% or higher. What does that mean? You find a 52-week high company and you go back on a monthly chart, you see it's consolidated between 3 to 6 months and it starts breaking out, then you have a high percentage that it's going to go on and do 30% higher than the S&P and QQQ. Got it? 3 to 6 months. So one of the charts they were showing, which we can look at, is AVGO. So I'm going to go to a monthly chart and I'm going to go to AVGO, right? It was on the list a while back, Broadcom, and we look at most recently and zoom in, and Broadcom did that exact move where we have 1, 2, 3, 4, 5, and went breaking out in the 6 months. So 3 to 6 months, Harold, you're at all-time highs. You get a 3 to 6 month correction, and you're at recent all-time high. It tends to outperform S&P and the NASDAQ by 30 plus percent. And we use our little tools from this high down to this low. We're already pushing 1448, 1272. So the likelihood we're going to get up to 320, maybe even 395 looks very good. And the rule is when this happens, so what's the criteria? We need to be all-time highs, followed by 3 to 6 months of a correction. And by the 6 month or sooner, somewhere in the 3 to 6 month realm, we got to break to new all-time highs. That is a bullish mark, and it's upwards of like almost 80%, 70 plus percent. that it makes a run over the next 6 to 12 months. Interesting, isn't it? And we're already reaching extensions. So what's my next target AVGO? 321, followed by 395. Amen? So let's look at another one. ALNY, a little biotech. I think it's a pharmaceutical. ALNY. Pharmaceutical. Now look at this baby. And if you can find where in the past it does the same kind of thing where it gets 3 months and breaks out, 3 months, 3 to 6 months and breaks out. Well, this most recently had the correction and now it's blasting off from the high to the low. It's already up toward the 2612. And since we broke to new highs, we're in our third month. So we probably got 3 more months, maybe up to 12 months. So next target 458 followed by 550. Interesting how that works. So you go to Market Chameleon, you do the 52-week stocks, 52-week high and low. Then when you get to that page, you click on the 52-week high button to bring the most recent ones to the top. And you start looking at your monthly chart, right? And if it's all-time high followed by a 3 to 6 month correction and we go breaking out, then it's likely going to continue. Got it? Here's one that is just setting up for your information. CMI. Cummings? CMI. This one's setting up right now, ladies and gentlemen. No buy, sell, or hold. It's not my job. But based on the percentages of this looks awfully tasty for us to start pushing to what? First target 408, 425, 470, 540, maybe 600. And right now, you look at the correction since all-time high, 1, 2, 3, 4, 5, 6 months. We're breaking out as we speak. So this is fresh off the press for a potential of this thing to go soaring much higher, right? I got the correction. We went blasting off. And you don't want to take 12 months, 2 years. They could still do it, but it's within the 6 month range, 3 to 6 months. You go breaking off, and this is doing it as we speak. Amen? So be careful with that. Actually, it's that one right there. So 1, 2, 3, 4, 5, 6, we're breaking out. And sure enough, this looks like a good opportunity for this to go higher. Who else is doing it? Generac. Generac's been beaten down and struggling. But looky, this baby's starting to do the same thing. Is this setting up for a nice little run? We got a measured bounce off of the monthly Magic Fibo, and we're breaking the 618786, so 208, 75%, 220, 70 plus percent. And based on this, little bit outside, because we got 1, 2, 3, 4, 5, 6 is like the 7th month starting to break out, but it still looks good on a measured bounce, and we still got targets to 208/220. That's a high probability, and this might set off the next 6 to 12 months of a rally. We shall see. And what I also like about this, since this thing has been beaten down after that correction, is from the all-time high here to this, we're within what? Likely going to make a 618 retracement from that high to that low. This thing takes off of this latest correction here. We go ripping up here. That sets the tone. We could still go up another $100+ roughly, 150. Make a 618 retracement off of that. So this looked good. Nice measured bounce. Broke the 618. Screaming, we're going to 208, 220. start breaking 253, and this looks like a nice 1, 2. And what if we do break above 250 or higher? Then Randy, remember we talked about that in the beginning of class? A beautiful measured bounce slash 618 type of retracement. This is why I like this one. Not that it's breaking all-time highs at the moment, but this right here, higher low, that sets the tone for us to go much higher. So let me take some of these off real quick so we can see what we're looking at. First things first is, take that off for the measured bounce for the moment, is why do I like this? From that low to this high, to this higher low, we should at least go, even if this is an ABC and we fizzle out and we're going to go lower, that should still give us at least 215 slash 280, 240, 230, 245. Well, what if this is 2.2? What I like about it, measured bounce, 618, 786 retracement bounce, right? And it's also not quite the 618, went a little bit deeper. I wish it would have stopped right at that 618 and hit the measured bounce. That would have been the double whammy, but I still like this. It's a measured bounce, bouncing off of our Magic Fibo, and now we're breaking out to the upside, and the targets are clearly shooting from that high to this low. My 618, 786 zone up here around 300, and upper threes, 618, 786. So it looks like Generac's going to make a run up there. And most recently, it's got this little measured bounce, which again, 2.2 from the recent high to low. I know there's a lot of lines on here, but you can see that 206, 218, push up to 249. So let me remove all of these real quick and just put the one that's most relevant for this measured bounce. Is this high to that low. We took out the 618, likely going to that 206, 218, 249. And Randy, what if this is, after this correction, this is the end and we're starting to see a 1, 2. Instead of an A, B going up in C, then the C should stop somewhere below, let's say 220, 225 and turn down. If it's a 1, 2, then this thing should rally above 250 or higher to set the tone for a 1, 2, 3, 4, 5 to even go much higher. Got it? So I like this monthly measured bounce. I like the fact from the recent high to low, we took out the 618 and we're shooting for 206, 218, still several dollars to go. And if this baby keeps going and breaks above 250, then that looks way more bullish for a 5-wave type of move. And that could push us up into the 300s, maybe even 400s. Amen? All righty. Just an FYI. So to circle the wagons, you go to Market Chameleon, you go to new stock 52-week high, and we look at BlackRock, for example. That one came up today. This is today's view. And BlackRock, BLK. So let's real briefly look at that. I haven't looked at this one yet because that's on the list today. But BlackRock's doing the same. Most recent, this is a beautiful one from the recent high to low. We're already pushing, but we did 1, 2, 3, 4, 5, 6 month. We broke out. That sets the tone for 6 to 12 months of a rally for that to continue. And my next target is going to be roughly 1250. Not too shabby. We're already reaching the extension. Next target should be 1250, then 1430, then 1535. Maybe we get up to 18. But this is typically where it sets off a multi-month run on those type of moves. Got it? All righty then. So again, in closing on this little scenario, Market Chameleon, you go to their website, you go under stocks, you come down here to stocks 52-week highs and lows. You click on that. Then when it comes to this page, you want to put the 52-week most recent to the top. So you click on it. You click on it again. That puts the most recent high. See, it's got a down arrow, so this is the highs in downward direction. And those are the most recent. So keep an eye on these, that if you see 3 to 6 months, you got a pullback, and it's starting to break out within that 6-month period, then that's one to keep the eyes on, and you look for another 6 to 12-month run. Okay? Just something I read an article. I started doing a little research and looking at this, and it's very interesting. I like that pattern, say the least. All righty, so let's finish up. So, what about Black Gold Texas T, the Beverly Hills? Well, we didn't do IWM. You know how I feel about IWM. I'm very cautious about IWM. Looking at the big picture, we got lower high, lower low. We're more likely to get a down move than a breakout. Most recently on the daily chart, we got the same type of high to low. We're starting to test this zone. So maybe we go up just a little bit more, but I'm short IWM for the long haul. I do think we're going to get a bigger correction. This thing is looking awfully gnarly, high, low in the danger zone on the bigger time frame danger zone, and we're still in the danger zone on the lower time frame. That's not conducive. So I made a statement here: before we go breaking 260 and higher, we should break 160 and lower. And that all fits the script, kind of like that pound yen scenario. We got the pullback, a lot of chopping, overlapping, grinding, grunting, laboring type action would warrant another leg down, as opposed to this thing just breaking out. So that's why we need a new low below this 165, 160 area, more than we need to go breaking out above 260. We're going to break 160. We'll see how that plays out, but I'd be very careful with buying this thinking we're going to the moon, Alice. This thing is ready to go plummeting, and a big negative and sign as you zoom in on the daily. If we turn down and then start closing below the Magic Fibo down here, I know it's a little ways down there, but if that happens and we get rejected within this zone, which we're in this smaller zone and we're in that bigger zone, still in the danger zone, we're likely to go pushing down. So be careful. Be real careful on that. Higher this goes, the more I want to sell it as opposed to buy it, looking for this thing to go breaking out. Now, looking at some of the big ones, Apple did bounce into the magic zone, and it's looking more and more bearish. Same reason. We got this big wave down, looks like 5 waves down. This is corrective and overlapping, reaching the 618786. So this is likely going to give me a push. So I have an Apple put spread out to the end of the year, looking for this to get a little push lower. No buy, sell to hold, but that's what I'm looking at, for this thing to fizzle up here and get that last leg down. A, B, C type of move. That's still on the charts, and all of this rally into this zone is just making this more likely going to get a big push. So be awfully careful up here. Nosebleed section. Black Gold Texas T. This is looking like we might get this blowout to the downside. So Randy, this is the farmer swing point back in 23. I think it was May of 23. We got that swing point low, and all this overlapping, chopping, lower high, lower low scenario. From this low, when we saw all this chopping action, I kept saying we're going to need a new low. We're going to need a new low. We're going to need a new low. We finally got it. Since that reversal, We're still getting lower highs and we haven't got a lower low yet, but we're chopping, grinding, making lower highs still like we did over here, kind of rinse and repeat. So this is more or less screaming, we need another swing point low. So be careful on this. And we're struggling, but we're finally starting to break that support zone, that red line. And if we can close below there, we kind of tested it, closed, tested it, closed. Is today the day? This sets the tone. If we close below this, Dan and others, this little swing point that we've tested, we're likely going where? 60. We break that, then we're likely going to go down to 53, 52, and my bias would be down here at 50. And if this happens, be careful. Because what happens when oil prices are below 60 and lower? Say they come down to 50, 47, whatever, in that range, say 50 bucks, then oil producers in the Middle East, et cetera, have a problem. They need oil prices 60 and higher, not 50 and lower. So that could cause some sort of reaction where they manipulate oil prices, start a little war, start a little something, something, and this thing goes ripping. And this is still on the technical picture. We've been talking about it, that if we do get this push lower, I'm very bullish. What? Because the world needs oil $60 and higher, if we get that push down to $50 or lower, man, that's a great opportunity to invest in some oil. Look for that bounce. Right now, I believe this is going to go lower. So maybe you buy some SCO ultra short shares, which SCO would be going the opposite direction. If oil prices collapse, SCO is going to be bouncing like it started. I mentioned it to you way over here. We're already up a couple of bucks. But as oil starts to break down further, this is going to grind higher. So I'm looking for somewhere in the neighborhood of this $23 range, at least 21 to 23-ish kind of range. So Gary, that's not a ton of money. Well, it depends how many shares you have. But this is likely, in my humble opinion, as oil breaks down, especially at closing below that support zone, opens the door to 60. We break 60, we should make a move toward 50. And if that happens, this thing should go ripping higher into 22, 23 is kind of my target zone. Do the reverse of that. If we go breaking, and let's just say we do, which this looks more and more like it, and we go down to 50, and I gotta kind of move this and stretch this way, and we go down to move this out of the way. We go down to 50-ish. That's about a 20 plus percent, 21% decline. And you do ultra short SCO, which should be a little more oomph, right? So that would mean we do a 20% decline here. That's roughly to give us about a 40%. So let's move this a little bit, get to 40%, move that out of the way, go up towards 40%. That would put us near that 25 target, almost. 40% would be somewhere around 24. My sweet spot somewhere between 22 and 23. Maybe we overdo, but even if it's a bummer and it underperforms, that's why I'm saying 22, 23. If it overperforms, then we go up toward 24, maybe even 25. My humble opinion. I can't tell you what to do. No buy, sell to hold, but this is looking awfully good, technically speaking, for this thing to go ripping higher as oil prices go lower. Amen. Gold and silver, be careful with that. I've been warning you about that as well. I know I got a lot of lines on here, so I'm going to take a lot of this off. but that's still stating we got a good chance this baby is going to go lower, and all this overlapping chopping action, just kind of doing a little maintenance on this gold chart so we can see what's going on. I do think we're going to get a push lower toward the Magic Fibo, and same reasons, right, Randy? That looked three wave, but then since then we got a lot of chopping and overlapping. What looked three wave? This, and that. And this does not look like a 1, 2, 3, 4, 5, any type of impulsive breakout. This is more conducive to the overlapping, chopping, grinding action. And we tried to break out, failed, tried to break out, failed, tried to break out, failed, tried to break out, failed in the danger zone. So this is more or less screaming we're due for a correction. And the likelihood is we're going to push down to 32, 31. If this being after an A and this is a B, and we get a 5 waiver down, then this next push down should get us at least to the 1618 zone, about 3100. And we do 3100 or lower, then we get a wave 4, wave 5. That could even push us toward my original target is the 3000 to 2800 zone, if that ends up being a 5 wave down. So be awfully careful with this. Again, we're getting lower highs. And after this, this clearly looks more like an A than the ABC. So it's a smaller degree A. And now all this overlapping chopping, Dan says we're more likely doing that for gold. So I would not be loading the boat short term for this to go blasting off. But once we get that correction, that's setting up a massive move higher. Massive. So yes, I'm very bullish long-term goal. In my humble opinion, it is going to 5,000. No ifs, no buts, no ands. And we're likely going to get this deeper correction first. After all of that price action, then this is a great opportunity to buy and hold gold. And if you still have a bunch of gold and you're doing cost amortization, fine. But if I'm spot golding it, trading it so aggressive, it's ready to go breaking out, in the short term, in my humble opinion, you're going to be very disappointed because I warned you when we hit this top, we would go toward the Magic Fibo. We didn't reach it. And since this low, disappointment not reaching it, we got all this chopping and overlapping. That's not conducive to a breakout right now. It is conducive to a much push lower. And if we get that extension where we go to 3,100 or lower, then that's likely the 1, 2, 3. And then we look for another 4, 5, even go deeper. Amen? If not, and this is the ABC, then it should put it still around 3,200, which is still another 150 bucks or lower. So which one's it going to be, Randy? I think that's an A, this is a B and a C, or a 1, 2 going down in 3, and it doesn't matter in either case. Rows leading to lower low. After all of that price action is screaming down more than breaking out, that's why I think we're going to get a better correction. Then we can buy and hold, go to Costco, buy silver bars, however you want to trade it. I'm definitely long gold long term, but short term, I think we're going to get a bigger correction and set up a greater opportunity to buy lower and sell higher as gold will go ripping to 5,000. Silver, the same boat. We're kind of reached the rinse and repeat, getting rejected out of resistance zone. ABC. So when gold makes its low, silver should make its low. And I'm thinking at least 31 to 30, somewhere in the 31. If this turns out like gold and this ends up being a 1, 2, 3, then we have to come to 30 or lower. Then we'd look for a 4, 5. And we get anywhere below 30 is a steal of a deal. And if we push to 28 or lower, back the truck up, because once this correction is over, it's setting silver to go to the moon, Alice. And I made a crazy statement, not a prediction, because I'll leave that for the prophets. But gold in this case is going to go to 5,000. Silver is going to go to $60/$70. In my humble opinion, that's a guarantee, and there are no guarantees, and it's a conservative target. So if we can get down to 30 or lower, look to the heavens and go, thank you, Lord. What a great opportunity you've given me. And take advantage of it, whether you're buying SLV, you go into Costco and buy a silver bar, or you buy it any kind of other way in your Roth IRA or your IRAs. Go to Roslyn Capital, you hear all the things you can buy and get some free silver and gold and blah, blah, blah. Or just buy some right here and buy shares. I own them and I'm looking to add more and I'm looking for this target. And again, in my humble opinion, it is conservative. Let's finish up with Bitcoin. Be careful. I do think there's a chance we're either going to break out. Let me go to the daily. We're either going to break out or we're going to get one more little push lower. Either way, I would prefer to see Bitcoin break down a little bit further. And it too looks more five wave, right, Harold? So this is looking more like an A, B, expanded flat, C down, should bring us somewhere into the area of A, maybe a little bit lower. I'd love to see this thing over accelerate to get down to Magic Fibo. And again, it's sloping upward, but we may not reach it like the last time we didn't quite reach it when we went breaking out. So I'm not trying to tell you, hint, 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 Bitcoin is absolutely going to come down to Magic Fibo. But if this is that expanded flat correction, we should come into the area of that wave A, which would put us somewhere around that 113 down about 110, somewhere in that zone. If not, and we do go breaking out, then I'm looking for this 124, 23, 24, maybe 25. If we do get the correction first, then I think we're going to push the upper ends of that 128 to 130-ish level and would put us at a bigger next run. If we go breaking out now, look for us to turn and reverse somewhere around 125 to 128. We get the correction followed by the breakout, then I think we're going to push the 130 or higher and then get a correction in the last push. So are we going to make 150, 175? That's still on the cards. We set it way back in 2022 when Bitcoin was at 22,000 or lower. That's the key. Remember, for those of you, whether you trade in NinjaTrader or not, we do have the software, including the Fibo extension retracements like you have in TradingView. I created that for us and I showed you how to do it in MetaTrader, and it's including in the software with NinjaTrader 8. And I'm still real big into TSLL. When Tesla goes breaking out, TSLL is going to go breaking out, but that's in there. It's like Prego, and this is winding up. I do think there's a chance this baby's ready to go ripping higher by year end as the robo taxis and things start to take over. I think it's going to put a dent in some of those ride shares when you can get in a robo taxi in these cars for very cheap versus spending a lot, 2, 3, 4 times more doing a ride share. I think it's going to bite into that in the coming future. And then there's robots, etc. So Tesla's not just about electric cars, it's about a lot of other things. The bias is we're going ripping higher. So that's why I own TSLL. And I'm going to leave you with the Bitcoin, if it corrects or not. How about our Ethereum? It's pushing, baby. Right, Randy? How about that ETHU? Hopefully all of y'all been in it. I've been tooting the horn for ETHU. We'll go over that in a second. But I'm going to warn you at the same time, if we start to bog down between 45 and 4,800 and we don't go ripping through it, and if anything like this happens, where, let me get my arrows for you. If we go up here and bog down between 45, which we're almost there, and 48, and we turn down and don't hold this Magic Fibo, which again is sloping upwards now because of that run. If we get turned down and don't hold the Magic Fibo, then this is setting up a massive A, B expanded flat where we will make new lows. Not only this 1400 low, but in the bigger picture, going into the next winter, crypto winter, we could even see new lows below this 800 down here, which would be yuck. I do not want to see it. I'm big time long, but it's on the charts. So yes, I think there's more upside. I kind of said it when we dip way down here. When Bitcoin starts to make a move toward its 150 to 170, which we're not even there yet. We haven't even reached the 125 to 30 yet. We're close. And we pull back, but once we start ripping from 130 to 150, 170 target on Ethereum, that this would at least go to 4,000. Look, we're already at 4,400. So right now, from the recent high to low, we already broke the 618,786 zone. You see it. So that is screaming, Randy, 53 to 55. Let me stretch that out for you. 5,800, right? Screaming we should go to 53 to 58. So I want to see this current rally break the 45 to 48, pushing us toward this target. And then we could even go upwards to push this towards 6,000. 51, 59, 6,000. We break that. Even 9,000 could come into play. But the main point of this conversation was ETHU. Hopefully you're as happy as I am, because Ian and others, what did I tell you, Harold? We go back towards 4,000. We're going at least to 164. Hey, hey, we're there, people. Does that mean it's over yet? This is an area I'm watching closely. If Ethereum goes breaking all-time highs based on how ETHU is responding, we're where we need to be, right? And if we go breaking all-time highs, then I expect we're going to get towards 200 minimum. That would be a disappointment. And this thing could go breaking up to 280, 300 zone. Got it? So if we go breaking all-time highs and push that 5,800, 6,000 type of move, then I would expect we're probably going to be up here in the 2 to 300 range. But I'm sitting pretty on, even when we bought it before I didn't like this, when we split right there. Let me get that out of the way. I don't know how I have that on my chart. Okay, gotcha. Remove. But this little split, see, I had hundreds and hundreds and hundreds of shares, Randy, and all of a sudden, for every 100 shares, I ended up with 5. Ouch. So I don't have hundreds and hundreds and hundreds and hundreds anymore. But even after that reverse split, which I typically don't like, look at this thing. It went from 20 bucks to 165. And I like that. I like it. We don't want it to bog down. So we need Ethereum to keep going. And I'm still real bullish. So I'm not saying you better close out right now. This is the end of the road. It could be. Maybe it is. Maybe it's not. But if Ethereum bogs down in that 50, 45, which we're almost there, to 4,800 zone, then be careful. It might be time you certainly take some profits off the table. And we're up beautifully. And yes, I do think there's more. But I did make a statement way back here when it was like doom and gloom. It split 20 for 1. I'm upset. What the world's going on? I said when Ethereum's going to at least go back to 4,000. And when it did, we would get to 164. Boom. Who's your daddy now? That's part of the technical picture. So, in closing, be in a position of authority. Don't allow all of those profits to evaporate. What can I do? I can go to my broker and say, if Ethereum gets down to whatever, where you feel comfortable, $100, then I want to close it, or 120, whatever you might think, whatever you're comfortable with. Yes, I think this has still got some left. And I'm watching this very closely. The reason I think we got more, because Ethereum tells me 75%, we got to go to 45. We came awfully close to it. Look at that high. 44.86. I mean, that's ballpark. So is that the end? Well, we still have a 70% chance we go to 48.40. I like those odds. And Ethereum is breaking out, trying to catch up with Bitcoin where it's way behind. And Bitcoin hasn't hit our target yet. So my overall goal was when Bitcoin gets to its target zone, I'm going to sell IBIT, my ETHU, Ethereum, Solana, all those things I have. I'm looking to unfold and get rid of, and then wait for the next rinse and repeat. So in closing, we talked about this many years in advance. In 2022, when we were below 15,000, below 20,000, I made a bold statement. I said, this is a crime. It is such a tremendous deal to buy Bitcoin below 20,000 that if you don't, you're going to regret it because this thing was due to go to 150. Well, even if we stop at 120 or 130, how about that investment? Beautiful. And what do we know? Every 4 years, you get a halving, 12 to 18 month run, crypto winter low, rip into the halving, 12 to 18 month continuation, and it's roughly every 4 years. So we can go back in history. There was a halving in 16, 12 to 18 month run. We topped out in 17. We topped out in 21. Hint, hint, hint. We're going to top out in 25. And then on the crypto winter lows, we topped out in 18. We topped out in, or bottomed out in 22. Before that one was 14 over here. We bottomed out right there in 14, right there, 14, there, 14. So it's like 14, 18, 22. So what does that teach us, Harold? We're going to unload all this crypto and love the gains we're getting. And then we're going to buy in late 2026 for the next halving in 2028. And we hold 22, hold it for 3 years, sell it. Then we buy it in late 26, hold it till late 29, rinse and repeat, rinse and repeat, rinse and repeat. And with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.